Welcome to Earnings Recap. Today we're covering Monday.com's earnings report and call. And get this, Monday.com users, they've now used the AI features over 26 million times.
Wow.
Yeah, that's like a 150% jump just since the end of last year. It really signals, fast adoption.
That's huge. It shows these AI tools aren't just like a gimmick. People are actually using them.
Exactly. They're becoming part of the daily workflow, it seems. So in this deep dive, we're going to cut through all the financial jargon from Monday.com's Q1 Fiscal 25 report and their call.
Yep.
We'll break it down into plain English, focus on what you need to know, and what really means.
Okay, let's do it.
All right, so where do we start? The overall picture.
Yeah, let's start there. The headline is Monday.com had a really, really strong first quarter.
Okay.
Revenue jumped 30% compared to last year. That brought them to $282.3 million.
30%. That's pretty significant growth for a company this size.
It really is. It shows they're executing well, grabbing market share.
And it wasn't just revenue, right? Profitability looked good too.
Absolutely. They hit record operating profit levels. Using standard GAAP accounting, it was $9.8 million.
Okay.
But non-GAAP, which often gives a better sense of operational performance, was much higher. $40.8 million.
Right. And cash flow. I saw a big number there.
Huge number. Adjusted free cash flow was $109.5 million. That's the most they've ever generated in one quarter.
Wow. So growing fast and generating a ton of cash, that sounds like a healthy combination.
It really is. It puts them in a great position, gives them a strong cushion, especially if the economy gets a bit shaky later on.
So what's fueling this? What are the key drivers behind these strong numbers?
Well, it seems like a few things are clicking. First off, their multi-product strategy seems to be working really well.
Ah, right. So not just the core work management, but also the CRM, the dev tools, the service product.
Exactly. Having that wider suite, it gives them more ways to land new customers and also expand within existing ones. It diversifies their appeal.
Makes sense. And we already mentioned the AI adoption, right? That 26 million actions figure.
Yeah, that's a massive jump. It clearly shows customers are finding value in using AI for things like automating tasks, getting insights faster.
Are they charging for that yet? Is that driving revenue directly?
It's still early days for direct monetization of AI, apparently.
Yeah.
But they did mention something interesting.
Oh.
They see a correlation. The more users engage with AI features, the more willing they seem to be to pay overall.
Okay. So maybe not direct revenue yet, but it's enhancing the value proposition, which could lead to better retention or upgrades down the line.
Precisely. It suggests customers see real, tangible benefits, which is key.
They also highlighted the enterprise segment, didn't they? Saying it's growing fastest.
Yes, definitely. That push into larger organizations is a big focus, and it's clearly paying off. That's where a lot of the market opportunity lies for them.
And they're building specific features for that market, too.
Right. They mentioned launching some enterprise-exclusive stuff like AI-powered risk insights and new portfolio reports, things designed for more complex, larger-scale needs.
And speaking of enterprise focus, there was that big announcement about the new hire.
Oh, yeah, the Chief Revenue Officer, Casey George.
Right. His background seems pretty impressive. Almost 30 years in enterprise software.
Yeah, he came from Quek, where he was overseeing, $1.3 billion in annual recurring revenue?
Something like that. And led a huge global team. Also had roles at Talent, Verint, IBM.
It's a serious hire. He's their first global C-level leader, and you can see the strategy here, right? Bring in someone with deep enterprise experience to really accelerate that upmarket push.
Definitely signals their ambition in that space. Okay, let's maybe dig into some more specific financials. We talked revenue. What about customer retention? The NDR.
Net dollar retention, yeah.
Yeah.
It held steady overall at 112%, which is solid.
Right.
But what's really encouraging is how it breaks down. For customers spending over 50 TALs a year, it was 116%. And for those over $100K, it was 117%.
So the bigger customers are sticking around and spending more. That's a good sign.
A very good sign. It shows the platform has value and stickiness, especially for their most important clients.
But they did give a slight warning about that number going forward.
They did. They mentioned that due to, general macroeconomic uncertainty, they expect the overall NDR might dip just slightly below 112% by the end of the fiscal year.
Okay, so acknowledging potential headwinds. What about margins? Gross margin looked really high.
Yeah, 90%. That's excellent. Shows efficiency in delivering their service. They do expect it to normalize a bit lower, maybe high 80s in the medium to long term, but still very strong.
And they're spending. R&D versus sales and marketing.
R&D spending actually went up as a percentage of revenue, from 16% last year to 19% this quarter.
Investing in the product.
Exactly. Continued innovation, likely more AI development too. But interestingly, sales and marketing expense went down as a share of revenue from 56% down to 48%.
So getting more efficient with their growth engine.
Seems like it. And that efficiency flows right down to the bottom line. Non-GAAP net income almost doubled year over year, $58.4 million versus about $31.7 million.
And earnings per share followed suit.
Big jump there too. $1.10 non-GAAP diluted EPS, up from 61 cents last year. So definitely becoming a much more profitable operation alongside the growth.
And they're sitting on a good pile of cash.
Yeah, cash and equivalents were up to $1.53 billion. And that record free cash flow we mentioned puts them well on track for their target of generating over $1 billion in free cash flow between fiscal 23 and 26.
Solid financial footing. They also mentioned headcount growth.
They did. Added 187 employees since Q4, bringing the total to nearly 2,700. They expect about 30% growth in headcount for the full year, mostly in sales, especially for that enterprise push and in R&D.
Okay, so aligning hiring with the strategy. What about the outlook? What are they projecting for Q2 and the full year?
For Q2, they're guiding to revenue between $292 and $294 million. That's about 24-25% growth year over year.
Still strong, though a bit slower than Q1's 30%.
Right. And non-GAAP operating income for Q2 is expected between $32 and $34 million, which is an 11-12% margin.
Okay, and the full year guidance.
For the full fiscal year 25, they're projecting revenue between $1.220 and $1.226 billion. That represents 25-26% annual growth.
And operating income. And cash flow.
Full year non-GAAP operating income is guided to $150 million, around a 12% margin. And adjusted free cash flow is expected to be $316 million, a margin of 25-26%.
So continued solid growth and strong profitability expected for the year. Although you mentioned something about the currency impacts.
Yeah, it's a small point, but they noted the negative impact from foreign exchange rates is now expected to be slightly less than they previously thought, less than 1%.
But they didn't raise the overall revenue guidance much despite that.
Correct, which, could suggest they're being a bit conservative, maybe building in a buffer for those macroeconomic uncertainties we talked about.
Right, makes sense. Okay, let's shift gears a bit from the numbers. What was the general tone from management on the call?
Pretty confident, I'd say. Enthusiastic about the strong start, the platform strength, but also, grounded. They emphasized disciplined execution while definitely acknowledging the uncertain macro backdrop. A balanced message, really.
And their go-to-market strategy, how are they thinking about that going forward, especially with the new CRO?
It sounds like they're sticking with the hybrid model that's worked well for them. Combining that product-led growth where the product itself attracts users.
The sort of self-serve motion.
Exactly. Combining that with a direct sales-led motion, particularly focused on moving upmarket. The new CRO hire, Casey George, is clearly expected to really supercharge that enterprise sales effort.
So keeping both engines running, performance marketing and top-down selling.
That seems to be the plan. Preserve both strengths.
What about the analysts on the call? What were they focusing on in the Q&A? Any major concerns?
The analysts seemed generally positive about the results. Their questions mostly centered around a few key areas, like how the new CRO will impact the go-to-market strategy naturally, the performance of the newer products, CRM, service dev, how AI adoption is progressing and whether it's influencing deals yet, and of course the impact of the macro environment on guidance and customer spending behavior.
So mostly focused on future growth drivers and sustainability. No red flags raised.
No significant red flags, no. More about understanding the levers for future growth and how sustainable the current momentum is.
Okay, so if we were to kind of boil it all down, what are the key strengths that really jump out from this quarter?
Well, first, the robust revenue growth, definitely. Then the record profitability, and especially that huge cash flow number, the clear success they're having in the enterprise segment.
The AI adoption rate, too.
Absolutely. That rapid AI uptake is a big one. And the high NDR, especially for those larger, more valuable customers. Oh, and the strategic CRO hire that looks like a key strength for the future.
Right. And on the flip side, any weaknesses or areas we should keep an eye on?
I'd say the potential slight dip in the overall NDR, as they flagged, due to the economy. That's something to watch.
Okay.
Also, the fact that AI and maybe the newer Monday service product aren't yet significantly boosting the revenue guidance specifically. It shows massive potential, sure, but it's not fully realized in the forward-looking numbers yet.
Right. Future potential versus current impact.
Yeah. And then just the execution risk, right? They need to successfully integrate the new CRO and really execute on that enhanced enterprise strategy to keep the momentum going.
Makes sense. So wrapping it up, it sounds like Monday.com really started 2025 strongly. Impressive financials, driven by that multi-product platform and increasing traction with bigger companies.
Yeah, a very solid quarter.
And that CRO appointment really underlines their focus on pushing further into the enterprise market.
Mm-hmm.
While they're rightly cautious about the macro climate potentially affecting retention a bit. The overall picture suggests a really solid foundation and significant growth potential ahead, especially with all the AI advancements they're rolling out.
Definitely. Which leads to a pretty interesting thought to leave folks with.
Yeah.
Well, think about how fast users are adopting these AI features, like we saw with Monday.com. How might these kinds of platforms fundamentally change the way businesses actually operate day to day in the next few years? And maybe even more importantly, what new skills might people, individuals and teams need to develop to really thrive in that kind of evolving landscape? Something worth mulling over.